I'm Catherine Ross, and I'm here on the floor of the NYSE with Jim Cramer. Jim, let's kick it off by going unfiltered. What's on the top of your mind?
Well, I just think that the resilience of the market is extraordinary. Just a few weeks ago, we were worried about trade deficit. We were worried about what the Fed was going to do. We were worried that earnings were going to miss. And ever since JP Morgan reported it, it's been off to the races. There have been very few companies that have seriously been hit. The only one that I think is really visible is McDonald's. And that's because Wendy's came in hard against them, and because it looks like the beef isn't as in as chicken, as we know from Popeyes, and we know from the move in Tyson and Sanderson Farms. So I just think that this has become a remarkable reporting period where even the likes of Caterpillar, as I said in real money, misses the quarter badly and goes higher. 3M, which was just not a great quarter, refuses to go down. And then Lam Research, a very big ActionAlertsPlus.com name, turns out to be the stock that's best performer in the S&P. So it's a remarkable time where it turns out you had to be more invested than people thought, at least, say, 3 months ago.
You know, you wrote about earnings season and how haywire it's been in your Real Money column this morning, which you can find over on realmoney.com. But I gotta ask, you've had a lifetime of earnings. What's making this one different?
Well, I think that what makes it different is that there are companies that seem to be very attuned to wanting to be in charge of their own destiny. Whether it be they don't want to be in the ETFs, which I think they're all sick of, by the way, or whether they have that extra cash that they got from the tax reform. So you'll see the likes of Caterpillar talk about being a dividend aristocrat, and then you look and they've just raised that dividend over and over and over again, so where it's a bit of a cushion. You see Dow Chemical, which just even 3 months ago, people were worried about that 6% dividend. Well, it turns out that they have ample cash flow and they're troughing prices. So you've got a lot of situations where you've got good dividend, a good buyback, and negativity. And when I look at the negativity, which I see pretty much everywhere, I come back and I say, look, unless you've got a very competitive threat that's come into your market, and there I'm thinking again about McDonald's, you kind of are in a halcyon time. I know there are a lot of people who say, look, this week is make or break. The Fed on Wednesday, Apple tomorrow, Alphabet today. Candidly, Alphabet has missed the last few times. Apple's made the last few times, but people don't seem to care. The Fed on Wednesday could be a big roadblock if he says, listen, I'm not worried about trade anymore. And then if we have a subpar employment number on Friday, then I think the narrative could change and you can start getting some selling. But right now, the metaphor of this year is cat, which was maybe one of the worst misses, and the stock is now up 7.
Jim, our Real Money stock of the day is AT&T after it posted stronger than expected earnings and it added subscribers.
Well, see there again, look at AT&T. Elliott realized, this is terrific, they were in our corporate governance conference not too many years ago. Paul Singer realized, or his team, because he would always give credit to his team, that AT&T is poorly managed, but that the fundamental franchise is good. So AT&T aligns itself with Elliott, which was very smart, and says, okay, well, look, we want to do what's right. We want to get better. Elliott then becomes a catalyst that allows them to say, hey, we screwed up on this. We did this wrong. And the next thing you know, you got a stock that I think is headed all the way. Maybe it's headed at 50, 60. It is not an expensive stock, and I wouldn't be afraid. I typically do not say this. I would not be against chasing it.
Well, with AT&T, with their partnership, the way that they kind of collaborate with Elliott, is this quarter proof of that?
It's very unusual. So many companies say they're going to collaborate with Elliott, and then they shine Elliott on. I don't think that's going to happen this time, Catherine. I think that Randall Stephenson cares tremendously about his legacy, and his legacy is such that he needs that stock higher. And if he gets it higher, you want to be in on it. And I think you should be in on it.
All right, Jim, thanks for joining. And guys, we've got, as Jim already said, we've got a packed week. So we're now heading over to our Action Alerts Plus Daily Rundown show where we're going to go through what you guys need to be paying attention to in this market. I'm Catherine Ross, and we'll see you tomorrow.